In this weekly Forex forecast, I'm talking about the DXY, the euro, the pound, the dollar versus the Swiss franc, and also gold. So a very important video, guys, because we just had July open and June closed at some significant areas for the DXY and the euro. So I'll have all the details in this video. And before we get started, if you are struggling with your trading, be sure to join us in VIP, claim your 85% off lifetime access using the link below. So that's real-time chat in Discord, also full access to the course. So I'm in there every day talking with members, helping them out, and also providing trade ideas, and you'll also see my trades in real time. So again, be sure to check out the link in the description of this video. If you're on the website, click on that link that says join VIP. So looking at the DXY, let's start here with the monthly time frame. So this is the channel that we continue to talk about here for the US dollar index. You can see that off of this low back here in 2011, this is the level down here that the DXY closed below in June. So as of right now, the DXY is bearish, right? Holding below that area around 97.7. However, at the same time, you've also got to consider that a month just closed and a new one just opened. So what you typically get from a market, and the DXY here over the past few months hasn't really been very typical in the sense that when you see a month like this, up here close, the very next one opens and just sells right off. Same thing back here. That is very rare. Typically, you'll see a market kind of retrace, a partial month after it closes. The same thing with a week or even a day. And so, right now what we're seeing is the month of June closed, July opened, and we're seeing a little bit of retrace into that June candle. Now, this by no means means that the DXY is, bullish. However, I do think we could see a little bit of further upside here for the DXY when we look at something like the 4-hour time frame. So again, you can see these lows right back here on the 4-hour, and this is the bottom of that channel, guys. So all these lows through here, this is what's going to be significant for the DXY. Now, what you'll also notice is that we have an unfilled gap up here at this area right around 97.7. So that makes this area incredibly significant for the DXY. And I would be surprised, I would be shocked, in fact, if we don't see a retest up here over the coming weeks. And that's just simply because, again, we just had a new month open and June was very bearish. However, you've got these lows back here, you've got this unfilled gap, and you also have this very impulsive move out of this range. Okay, so typically when you get that, a market will come back and fill that area because you've got open liquidity there, right? Up here around 97.7. Now, as far as the, local levels here that I'm talking about today, we've got this area just above 97. Okay, so we talked about this in recent videos, but you can see where we've got these lows down here, also the closing prices through this area, and also this closing price here on the 4-hour. Now, today's candle, this right here, guys, this was due to better than expected U.S. employment figures. In fact, they were very bullish for the U.S. dollar. Of course, we saw 97.40 retested up here that we talked about last weekend, and we saw a sell-off from there. In fact, the sell-off here, if you take a look at something like the 5-minute, or let's just look at the 30-minute, that'll do, you can see that this was the bullish impulse following NFP today. And what you'll notice is the market came all the way back down here and erased that entire move following NFP, right? Now, if you look at the 4-hour time frame, though, and this is where the high time frames really are significant and helpful, because what you'll notice is that so far we had the 4-hour close above. The current 4-hour candle found support down here at this closing price. So the bottom line here, guys, I'm not going to sit here and say that the US dollar is bullish long term, okay? I don't think that that's the case. As long as we're below 97.7, that's going to be an incredibly significant area for the US dollar. However, what I am going to say is that this right here looks bullish, at least in the short term, okay? You've got the market coming off this area around 96.6. You had the fake out below here, and now we've got the reclaim of lows like this down here and highs like this just above 97. Okay, so I think in the short term, if the DXY can stay above here on a 4-hour closing basis, especially the daily, I think that we're looking at another retest up here of 97.40 potentially. All right, again, we did see today's high touch that level, but another retest could be in the cards here if the DXY can stay above that 97 area. Now, above that, of course, we have 97.7. So personally, what I think we see here is a range-bound market between these two areas, as long as 97 holds. And then, above here, if we get above 97.40, we're looking at 97.7. And that's going to be, again, a significant retest for the DXY. So in my opinion, you don't want to find yourself getting long the dollar up here in this area, just because that is going to be such a significant resistance area here for the DXY. Now, before we move on, though, guys, I will say that if we see, okay, and this is the big if, but if we were to see this tested here over the coming weeks and the DXY get back above here on the high time frames, I'm talking not 4-hour time frame, I'm talking daily and weekly charts, then that could be bullish long term for the DXY. But as of right now, we have to respect what's on the chart, and what's on the chart right now is 97.7 resistance, okay? But again, in the short term, I think we could see a little bit further upside here as long as the DXY holds above that 97 area. Okay, so let's move on here to the EURUSD. And if you guys are enjoying this content, be sure to subscribe to the channel and hit that like button because it really does help these videos out and I really, really appreciate it. So looking at the EURUSD 3-month time frame, the quarter just closed up, so this is appropriate because we have the euro now trading back within this channel from, get this, 1985, okay? And the reason we have pricing data prior to 1999 when the euro started is because this uses a pre-euro basket of currencies from FXCM, okay? So that's how we have data here back to the 70s. And it's really interesting the fact that the euro here, if we look at the recent price action, I say recent, really the last few years, you can see where we had the euro break down from this, okay? So support through here. We had the euro break down back here in 2022. We saw the retest as new resistance here. We obviously got a few years of sideways action, sweep the lows, and now we've had the close back above, okay? So this area comes in right around 115. Now there's no guarantee that we do see the euro come down there and retest that area. But like I said in the last video, guys, looking at something like the 4-hour time frame, I do think, like I said last time, I do think that when you look at this chart, I'm going to get rid of this here, this level from 1985, because it's not going to hold up here on the lower time frames. But when you look at this channel right here from May, and this is what I talked about in the last video, where we had that risk of a pullback here in July. Okay, June was very bullish for the euro. And so, partial retrace into that candle makes a lot of sense. Furthermore, like I said last time too, there is a sell side single print down here, an imbalance following the expansion out of this recent range. So if we dissect that here for a moment, let's take a look here and zoom in on the 4-hour. You can see that this back here, okay, this high, we had these highs through here and we had these lows. Now, this was also a bull flag that we talked about at the time. However, really, when you look at this is really just a range bound market, right? And so when you had this expansion out of this range, what this created was what's called a single print down here or an imbalance because we saw the expansion out of this range and we never saw the euro come back here and retest this. So this imbalance down here, oftentimes these are, magnets for the market, for lack of a better word, because market makers like to make sure that as much liquidity is in play as possible. And what this causes back here during times like this is you have that imbalance between buyers and sellers. So there is open liquidity down here in this region. So 1:1638, guys, that is the location of the single print. We've also got these highs back here. So if we see the euro come down here in the coming days and weeks, then that is going to be a significant support area. A good chance that that lines up with the DXY up there around 97.7. Okay, so if we do see the DXY closing this gap back here, testing this area around 97.7, then there's a good chance that the euro is also down here in this area at these highs and closing that imbalance. Okay, now at the moment, you can see it's a little bit speculative right now because of that last 4-hour close. Wasn't exactly below these highs back here, okay? But if you treat this as a range and look at the closing price back here as well, then you've got this long upper wick. It does kind of look like it's holding below this area on the 4-hour time frame. And we also know that the DXY is holding above 97 on the 4-hour time frame as well. So looking at this, guys, looking at this channel here from May, again, I'm not saying that the euro is bearish long term, but I do think we still have that potential for a pullback with the market coming off of that May channel resistance, okay? So as long as this is the case and the market's making lower highs and lower lows, and we've also got this single print down here in this area around 116.38, I think we have the potential for some lower prices here for the euro. Now that could change, of course, if the DXY gives up 97 and we have the euro breaking, back above these highs up here, okay? So it could change, obviously nothing is guaranteed, but for now I am looking for a, further pullback here from the EURUSD. Okay, so moving on to GBPUSD. Also speculative for now, guys. And again, I want to be very clear here. I'm not talking about macro tops for these markets, okay? But at the same time, you've got to at least entertain the potential for a pullback from some of these markets, considering this rally that we've seen recently. Okay, these have been very aggressive rallies. And currently, you can see the pound right now, if we draw a level from the high back here in 2023, the high in 2024. And the reason this is significant, guys, we've only got 2 touches off of this trend line. Typically, I would not do that. But these are yearly highs, 2023 high, 2024 high. Okay, so this is significant because you can see too, during this price action, we've got several touches off of this level, and currently the pound is holding above it as new support. Okay, so this right here is not bearish. This is not bearish because the market is holding above it as new support. However, if we do see the DXY, okay, still a big if we do see the DXY gain ground and the pound closes below areas like this, right around 136.30, okay, so right through here, if we see it lose areas like this on the high time frames, then we could see a move down here into some of these imbalances, because notice how here on the daily time frame, we've got this wick today, or I'm sorry, yesterday, coming down here into this candle. However, this candle right here sticks out like a sore thumb because you've got this key area down here and we had this very aggressive move up, okay? And there was no retrace into this area whatsoever. So if the pound were to close below here, again, it's still a big if, guys. This is not a prediction. If the market were to close below here, okay, on the high time frames, then we could get that push down here into pockets like this, okay? That is one scenario. And again, with the DXY testing 97.7. Now, of course, until that time, this is just a range-bound market. However, with that said, I would not be buying this, first of all, because of this large bearish candle. Doesn't really look great here for the pound. And also, like I said, with the DXY holding above 97, there's nothing to justify buying GBPUSD here. So if anything else, or if nothing else, I'd be looking for, a close below here to target some of these imbalances down here in this area if we do get it, okay? So not a whole lot to do here. I don't like the structure here as much as the euro, but that is one scenario to keep an eye on as we head into next week. All right, so the dollar versus the Swiss franc. Now, this pair has not been a great vehicle for trading US dollar strength. You can see that here today, even though we've had this massive move from pairs like the euro, really this pair is just kind of lagging a little bit. Now, with that said, though, you can see that we have some really clean levels, and I've talked about this descending channel here in recent videos. Okay, so what is striking about this here today is that so far, yes, you still have this range low back here around 80.40, maybe just above. However, you've also now got this bullish reclaim of the bottom of this channel. Okay, so we talked about this last weekend, and you can see where on the 4-hour time frame, okay, you can see where we did get a 4-hour close back above. So this is really clean, guys. And we've talked about this in VIP. This is the benefit of being in Discord, is that I was talking about this yesterday. Okay, I was talking about this when the market was down here, talking about the bullish structure, because we were making these higher lows into this resistance, okay? And furthermore too, guys, what's really interesting about this, if you look at the hourly time frame, the dollar versus the Swiss franc, this actually confirmed an hour prior to NFP, okay? So if we move this up here to extend off of this high right up here, all right? So what you'll notice is that this candle, this hourly candle right here, okay, so again, support back here, we had resistance through here, and then we had this hourly candle close above right before NFP. Now, of course, the market could have gone the other way, but this right here was an indication that we could get a bullish move from the USD, which we certainly got. All right, so going forward, guys, what I think we could get here from this market. Now, you've got this pocket back here of consolidation, okay? So this right here is going to be resistance for this pair. However, I do think that this bullish reclaim could be good for a push back here into this area around 80.40. Now, it could be just higher than that, this low back here, and also this one, but essentially this was the previous range low. We saw June close below it, and I do think that this reclaim we're seeing here today could be good enough for a push back up here into 80.40. The question there, though, guys, is will we get a further pullback? And, look, if the DXY stays above 97, then we might not. This right here might be it, okay? This could be it. However, there's nothing saying that we can't get a sweep at that low or retest this low going into next week. But again, I do think looking at this bullish reclaim right here and this failed breakdown, that could be good enough for 80.40. Okay, so short-term opportunity there. Again, this area up here probably lines up with the DXY around 97.7 that we talked about last week. So you don't want to find yourself getting bullish on this market into this level. But if you're playing the reclaim down here and looking for pullbacks down here in this area for that push up at that 80.40, I think that makes a lot of sense. Okay, just my opinion, of course, not financial advice. Now, let's wrap things up with gold here, XAUUSD, which is really interesting, guys. And again, the benefit of being in VIP is we talked about how this week so far closed a day above that 2025 trend line. So what I talked about last week is how the week closed below the trend line, right? We got daily closes below and a weekly close below. However, what was confusing here, if you're not familiar with high time frame closes, is you can see that, this is our trend line here, right? And we had the, we got an XAUUSD closing back above it this week. So if I move in, what you'll see here is that we had this candle on Tuesday, close above, okay? So close above here, respected as new support here, got a further move up on Wednesday, not really that great though. And then we had the market fail today on those strong NFP numbers. Now, why did this happen, right? Why did this fail? And the reason it failed is if you go to the weekly time frame, right? The weekly time frame is always going to be more significant than the daily, and it comes down to volume. There's more volume in a weekly candle, therefore it holds, more weight than a daily candle just because volume equals conviction. Okay, I talk about that all the time, but volume equals conviction. It's why I use the high time frames, and the weekly is always going to trump the daily time frame. So look at this here. We had 2 weeks ago actually, close below, retest as new resistance this week. Okay, so that is why today on Thursday it failed, which by the way, guys, this video, I should have said this at the beginning, but this video is coming early this week just because tomorrow on Friday, it's a US holiday. So this is failing, and really this is just gold holding this level as new resistance on a weekly closing basis, okay? That's what it comes down to. So if this keeps up, right, and if the US dollar stays strong, which by the way, this could be indicative of a stronger US dollar, at least in the short term, if gold holds up, below this area around 33.40, okay? So if we get a bearish candle here today, if this turns into a bearish engulfing candle at the close, all it has to do is engulf the previous body, not the high low. That's a misconception. It's the body that matters. If we get that, then one thing I'm looking at here is the potential, and obviously this depends on the US dollar staying strong as well, but if you look at this on, let's say, a 4-hour time frame, what you're going to notice here is that, again, this is the market holding below this, right? So just to kind of recap, guys, we had last week close below. We had this week trying to reclaim this area right through here, right? Support through here. And now today is moving back below. And the reason for that is it's holding below it on the weekly chart. Now, instead of looking for shorts up here, if that's what you're going to do, of course, trying to short gold is obviously a risky endeavor considering the uptrend we've seen for years. But with that said, though, you've got to respect the chart. So with that in mind, there is a buy side single print up here off of this low. Okay. So off of this low right here, right around 33.41, there is a single print up here right there at that trend line. So personally, what I will be looking for is if today closes the day like this, if today closes the day as a bearish engulfing candle, then I think that this area, okay, so right up here around 33.40 becomes resistance and also a potential magnet before the move lower, okay? So if we look at this here on the hourly, what I would be looking for is something like this, okay? Close the day bearish. If we get the close, bearish, engulfing that previous day, and then we get the move up here to 33.41, maybe just above this general region, then we get the potential sell-off. Okay, that's what I'll be looking for here from gold. Only if the DXY stays constructive above 97. All right, so I know it's a lot to consider. There's a lot going on right now in these markets, but I do think we could get that further pullback from gold simply because even like I said, even though we had the day close above that 2025 trend line this week, when you look at the weekly time frame, this is what really tells you where gold is likely headed here over the coming weeks. And personally, I think if we get the market holding below here, testing this 33.40 area and selling off, then you've got support down here around 32.65, followed by the area just above 3,200. Okay, so 32.07 or so, you've got lows back here in this area. So that could be interesting there if we get that over the coming days as well. And then of course, you've got the range lows around 31.30. Okay, so again, guys, a pretty bearish looking candle here from gold. But I would be keeping a close eye on that area around 33.40 for a potential retest. If today closes bearish, that's going to be a big key here. But if today closes bearish, if the US dollar stays constructive, 33.40 is the area to watch for a potential retest and rejection from that area. All right, that's it for today's video. Be sure to subscribe to the channel and smash the like button. Don't forget to, guys, join us in VIP for real-time chat and my trade ideas. See the link in the description below for 85% off lifetime access. Have a great weekend. Happy 4th of July for all of my US viewers out there, and I will talk to you again next week.